All right, let's just get right into it. The holiday season is here, and if you're feeling that weird mix of festive excitement and, let's be honest, a little bit of financial dread, you are definitely not the only one. We're going to unpack the real story behind the 2025 holiday season, looking at the hard numbers and the psychology driving what's in our shopping cart.
It's the question that seems to be on everyone's mind, isn't it? There's this undercurrent of anxiety that's just tough to shake. And it turns out the numbers tell a fascinating and, frankly, pretty startling story about what's really going on.
Let's start with this number right here, $778. According to a recent Gallup poll, that's what the average American is planning to spend on holiday gifts this year. And, at first glance, that seems like a pretty decent chunk of change.
But this is where the plot thickens. That $778 figure, it's down a whopping $229 from what people said they were going to spend just 2 months ago. This is not a small adjustment. It is the largest mid-season drop in spending plans that Gallup has ever recorded. Ever.
So, here's the bottom line. That feeling you have, it's not just in your head. It is a measurable, historic shift. We're watching the festive spirit have a head-on collision with financial reality, and it's forcing everybody, shoppers, and even giant companies, to completely change their game plan.
To really get a handle on this, let's pull back the curtain on a company that basically lives and breathes the holiday season, Hasbro. I mean, how does a massive toy and game maker even begin to navigate an environment this shaky? Well, we dug into their annual report, which is kind of like a company's diary. It doesn't just lay out their strategy for winning, it also reveals their biggest fears about the economy. And what we found was really, really telling.
So first, here's their battle plan. Hasbro is banking on its absolute powerhouses. We're talking Magic the Gathering, Monopoly, Dungeons & Dragons. They've got a huge global licensing business and a games division that is incredibly profitable. This is basically their suit of armor against the economic storm. But then, you see what's keeping them up at night. Right there in their report, they list their biggest risks: inflation, rising interest rates, the hit to discretionary spending, changing tastes, intense competition. Does any of that sound familiar? It should. Their biggest corporate fears are a perfect mirror of the worries we're all dealing with at home. And that just perfectly illustrates the connection, doesn't it? The anxiety happening inside the corporate boardroom is directly tied to the tough choices being made in living rooms and on shopping websites all over the country. So let's zoom in on that personal side of things. Just picture it. You're scrolling through a gift guide online, and you see it, the perfect gift. Maybe it's one of the year's hottest toys. Maybe it's something else entirely. You feel that pull, right? That little jolt of excitement, that desire to make someone really happy. And then, bam, reality hits. This statistic from NerdWall is just staggering. Almost a third of shoppers who put last year's holiday gifts on their credit cards are still paying off that debt. All of a sudden, that perfect gift comes with a whole lot of financial baggage. This, right here, is the core conflict of the 2025 holiday season. It is a full-blown psychological tug-of-war. We have this deep human need to be generous and to celebrate with the people we care about, but it's fighting against the very real hard limits of our budgets. And you can see that conflict visualized so clearly here. That desire for celebration, for experiences, for connection, it is incredibly strong. But it's being met by an equally powerful wave of economic anxiety. So what gives? How are people actually resolving this? Well, faced with this dilemma, people aren't just giving up. No, they're adapting. A whole new holiday playbook is being written, with millions of us finding really creative ways to celebrate that don't completely break the bank. First up is a tool you have definitely seen everywhere: buy now, pay later. At its core, it's just short-term financing that lets you split your payments over time, a lot of times with no interest. It's really just a way to manage your cash flow when things feel a little tight. And it's becoming a huge part of the strategy. Data from NerdWallet shows that nearly 1 in 5 holiday shoppers, that's 18%, are using these BNPL services to buy presents this year. That is a major shift in how we're paying for the holidays. But the biggest change might not be how we're paying, it's what we're buying. According to the research firm Circana, a majority of consumers, we're talking 57%, are planning to buy an intangible gift this year. In other words, an experience. And the logic behind this shift makes total sense when you think about it. Physical stuff, it can create clutter. Its value almost always goes down. But experiences, they create memories that last a lifetime. Their value is in the connection, in the story you get to tell, not the price tag. It's a fundamental reevaluation of what makes a gift great in the first place.
So the 2025 holiday playbook is pretty clear. Step 1, prioritize experiences over things.
Focus on making memories, not adding to the clutter. Step 2, use flexible payment options like buy now, pay later to make it all more manageable. And step 3, become a master value hunter. Actively look for those deals, discounts, and promotions.
Now, these new strategies are helping millions of people get through a tough season, but they also make you step back and ask some bigger questions about the real price of all our celebrating and what the future of all this is even going to look like.
Because once the wrapping paper is in the recycling bin and January hits, that financial reality sets in. The memories from those great experiences will last, for sure, but so will the payment plans for the gifts we bought. This season is a giant flashing sign that our whole relationship with spending is changing.
And that really just leaves us with this final thought to chew on. This year, we've seen this huge shift toward experiences and flexible payments, mostly out of necessity. So the big question is this just a temporary fix, or is this a permanent change in how we celebrate? In a world where economic pressure feels like the new normal, how are we going to define what value truly means?